Welcome to our deep dive into Nestle's performance in 2024. We've got their annual report and financial statements. And let me tell you, these documents are packed, like really packed with fascinating insights. We're going to break down their business, explore what's working, what's not, and dive deep into the financials, from sales figures to those all-important dividends.
Absolutely. We'll go beyond just the numbers. We'll really understand that why behind Nestle's performance. You'll be a Nestle aficionado by the end of this, ready to impress anyone with your deep Nestle knowledge.
Okay, so first things first. Nestle, it's a global giant. We're talking
Yeah.
factories in 75 countries, selling products in 185. And their portfolio, massive. Everything from beverages to pet care. Seriously, they've got it all.
It's remarkable. And that's why understanding their business segments is key. Each zone, North America, Europe, Asia, Oceania, and Africa, Latin America, and Greater China. Each one has its own story to tell in terms of performance.
Right, like a global taste bud map. But let's talk numbers. The annual report highlights organic growth as Nestle's main focus. In simple terms, that means growth from their existing businesses, not just from acquisitions.
Exactly. And looking at organic growth percentages, Europe takes the lead, solid 3.3%. Seems like Europeans can't get enough of those Nestle products.
Interesting. But North America is no slouch, contributing a whopping 32.1 billion Swiss francs in sales. That's almost a third of their total revenue.
It is, and it shows the strength of Nestle's presence in that market now. Asia, Oceania, and Africa. They're following closely with 3.4% organic growth. Region to watch for sure.
Definitely. Latin America posted a respectable 2.5%, while Greater China lagged a bit at 2.1%. Each region faces its own unique challenges and opportunities, which we'll unpack further when we delve into specific segments.
Before we get there, we should highlight Nestle's globally managed businesses. Nestle Health Science and Nespresso, powerhouses in their own right.
For sure. Nestle Health Science. Booming. It achieved a remarkable 6.2% organic growth, reaching 6.7 billion Swiss francs in sales. Seems like everyone is jumping on the health and wellness bandwagon.
They are. Nestle Health Science is perfectly positioned to capitalize on that trend. And let's not forget Nespresso, still going strong with 2.2% organic growth and 6.4 billion Swiss francs in sales. Those coffee lovers are loyal.
All right, let's dive deeper into some specific segments. First up, pet care. Now, this is where things get really interesting. Nestle is using AI, and get this, litter boxes, to personalize cat food.
The Petivity Smart Litter Box Monitor. Talk about innovation. It tracks a cat's weight and elimination patterns to recommend personalized diet and supplement plans.
As a cat owner, I'm both fascinated and slightly terrified. But clearly it's working. With sales of Pro Plan Vital Systems skyrocketing over 70% in 2024, maybe I should get one for my fussy feline.
It's a great example of how Nestle is leveraging technology to tap into the growing trend of personalized pet care. It's not just about feeding your pet anymore. It's about understanding their individual needs.
Right. Now let's switch gears to powdered and liquid beverages. One word? Cold coffee. Global trend that's impossible to ignore. Nestle is right on top of it.
Absolutely. They've launched innovations like Nescafe Espresso Concentrate, specifically designed for cold coffee concoctions. They're clearly targeting those younger consumers, all about that iced coffee life.
Smart move.
Right.
They're also expanding their ready-to-drink cold coffee options for those on-the-go coffee cravings. And of course, they haven't forgotten their core hot coffee brands, with new Nescafe and espresso flavors hitting the market. Talk about covering all the bases.
They are. And they're also cleverly partnering with Starbucks for the Starbucks by Nespresso line, bringing those iconic flavors to the home coffee experience.
Speaking of appealing to a wider audience, let's talk about Nestle's prepared dishes and cooking aids segment. It seems everyone wants a taste of world cuisine these days, but who has the time?
Convenience is king, right? And Nestle is tapping into that desire. With its partnerships and global flavor profiles, their collaboration with Tapatio is bringing authentic Mexican flavors to consumers' kitchens.
And their partnership with Chef Ming Tsai is doing the same for Asian cuisine. It all ties in perfectly with their Magic Asia range, offering those delicious, easy-to-make global meals that everyone seems to be craving.
Exactly. They're not just offering products, they're offering an experience, a taste of adventure, all from the comfort of your own home.
Now, let's move on to a global icon, Kit Kat. This confectionery powerhouse just keeps going strong. I mean, who doesn't love a Kit Kat break?
It's remarkable how Nestle keeps this brand fresh and relevant. Innovative formats, like the Kit Kat drumstick in Australia, are attracting new fans, and their marketing, pure genius.
Right. Their Candy Crush partnership and the Break Free campaign were brilliant. And get this, they've got an upcoming partnership with Formula One Talk about global reach.
It's a clever way to tap into that excitement and adrenaline, aligning perfectly with the Kit Kat brand message. They're constantly finding new ways to engage consumers and keep that iconic red wrapper top of mind.
Now, for something completely different, water. It's a staple. But Nestle is making it exciting. They're relaunching Perrier with a brand new look. Maison Perrier.
Think premium, think healthy hydration. They're targeting a younger, trendier audience with this makeover, even bringing in Lily Collins from Emily in Paris for their digital campaign.
That's smart. I can totally see that resonating with the Emily in Paris crowd. And speaking of health, let's wrap up this segment with nutrition and health science. Nestle is going beyond just basic nutrition. They're focusing on specialized solutions for specific needs.
Exactly. Resource Ultra Plus is a great example. It's specifically designed for patients who struggle to consume large volumes. With its high protein concentration and low viscosity, they're really focusing on those niche markets, providing targeted solutions.
It's incredible how Nestle is using its global scale and resources to cater to such a diverse range of needs. From AI-powered litter boxes to specialized nutrition, they're truly a company with a finger on the pulse of what consumers want.
They are. And now that we've explored their impressive portfolio of products and services, let's shift our focus to the heart of the matter, their financial performance in 2024. Get ready for some number crunching.
All right, let's dive into the financials. First up, the big picture. Nestle reported total sales of 91.4 billion Swiss francs, with organic growth clocking in at 2.2%. Remember that organic growth is what they're really focused on.
Exactly. Now let's take a closer look at their income statement. One key metric to note is their underlying trading operating profit margin. It remained flat at 17.2%, primarily due to increased investment in advertising and marketing.
So they're spending more to attract those customers and keep those sales growing. It's a strategic move, but it does impact their profitability in the short term, something for investors to keep in mind.
Absolutely. Now let's shift our attention to the balance sheet. Their net debt increased to 56 billion Swiss francs, primarily driven by dividend payments, share buybacks, and those pesky foreign exchange movements.
It's important to note that their net debt to adjusted EBITDA ratio is now at 2.90, which is at the high end of their target range. That's something investors will want to keep an eye on, as it could affect their financial flexibility moving forward.
Agreed. Now, let's look at cash flow, the lifeblood of any business. Nestle boasts a strong operating cash flow of 16.7 billion Swiss francs.
That's impressive. So where's all this cash coming from?
It's fueled by their strong sales and efficient operations. What's even more important is their free cash flow, which reached 10.7 billion Swiss francs. This is the cash they have left after investing in their business, and they're primarily using it for capital additions, essentially ensuring future growth.
Now, let's talk about something I know our listeners are keen on: shareholder value. Nestle has an incredible 65-year streak of maintaining or increasing dividends in Swiss francs. That's commitment.
It is, and they're not stopping there. They've announced a proposed dividend of 3.05 Swiss francs per share, a 1.7% increase from the previous year. Good news for those dividend-loving investors.
And let's not forget their recently completed 20 billion Swiss franc share buyback program. They're clearly serious about returning value to shareholders.
They are. And that commitment to shareholder value, combined with their strategic investments and diverse portfolio, makes Nestle a company to watch.
All right, that was a deep dive into Nestle's financial performance. We've covered a lot of ground from sales to dividends, but there's more to come.
Indeed, we've just scratched the surface. Let's dig deeper into Nestle's plans for the future, starting with their medium-term organic growth target of 4% plus cessation. It's ambitious, reflecting their confidence in their growth strategy.
Ambitious, but achievable. Considering their track record, they're also aiming for an underlying trading operating profit margin of 17% plus PES, which indicates their focus on profitability alongside growth.
Exactly. They're not just chasing revenue. They're looking for sustainable, profitable growth. And to achieve that, they're making some strategic moves, like reorganizing their waters business.
Interesting. What's the thinking behind that?
It's all about unlocking the full potential of their water brands. They're also exploring partnerships in this segment, which could open up new avenues for growth and innovation.
Partnerships seem to be a key part of their strategy, especially in those fast-growing segments. Now, no business is without its challenges, and Nestle's no different. They've highlighted some key risks and uncertainties in their report.
Of course, climate change is a major concern, as it is for many global businesses. But Nestle is committed to reducing greenhouse gas emissions and meeting its net zero roadmap.
They're actually walking the walk, too. They've already achieved a 20.38% net reduction in greenhouse gas emissions compared to their 2018 baseline, meeting their 2025 target a year ahead of schedule.
That's impressive. It shows they're serious about their environmental commitments. They're also focused on mitigating risks related to geopolitical and societal factors, supply chain disruptions, and ethics and compliance.
Those are all critical areas that could significantly impact their business. It's good to see they're taking a proactive approach to managing these risks. But enough about the potential bumps in the road. Let's get back to the exciting stuff, those individual business segments, and the trends shaping their future.
Agreed. Let's start with pet care. One word: premiumization. Consumers are increasingly willing to spend more on high-quality pet food that meets their furry friends' specific needs.
It's like the humanization of pets, right?
Yeah.
We want the best for our four-legged family members, and Nestle is capitalizing on this trend with science-based premium brands like Purina Pro Plan, Purina One, and Friskies.
Exactly. And they're not stopping there. Their innovation is evident in products like Purina Pro Plan veterinary supplements, offering targeted solutions for various pet health concerns.
And of course, we can't forget the groundbreaking Pativity Smart Litter Box Monitor. It's revolutionizing personalized pet nutrition and giving Nestle a real edge in this competitive market.
It's a game changer for sure. Now let's switch gears to powdered and liquid beverages. The global shift towards cold coffee is a major opportunity, and Nestle is perfectly positioned to ride that wave.
They've got innovations like Nescafe Espresso Concentrate and Nescafe Ice Roast, specifically designed for cold coffee creations. It's clear they're targeting those younger consumers who are all about that iced coffee lifestyle.
And they're expanding their ready-to-drink cold coffee offerings, appealing to those on-the-go coffee cravings. But they haven't neglected their core hot coffee brands either, with new flavored Nescafe and Nespresso products hitting the market.
They've got all the bases covered, and their collaboration with Starbucks for the Starbucks by Nespresso line is a stroke of genius, bringing those beloved flavors to the home coffee experience.
It's a win-win partnership that expands their reach and appeals to a wider audience. Speaking of appealing to a wider audience, let's talk about Nestle's prepared dishes and cooking aids segment. The demand for convenient and flavorful meal solutions is on the rise, and Nestle is answering the call.
They're tapping into the global cuisine trend with our Maggi Magic Asia range, offering easy and delicious Asian-inspired meals. And their collaborations with Tapatio and Chef Ming Tsai are bringing popular Mexican and Asian cuisine to the frozen food aisle.
They're meeting consumers where they are, offering convenient solutions for busy lifestyles, without sacrificing flavor or authenticity.
And they're not afraid to innovate either. They're even capitalizing on the air fryer craze, with products like Maggi air fryer seasonings.
It's all about staying ahead of the curve and adapting to evolving consumer preferences. Now let's move on to confectionery, where Kit Kat continues to reign supreme.
It's incredible how Nestle keeps this brand fresh and exciting. They're introducing new formats, like the Kit Kat drumstick in Australia, to attract new consumers. And their strategic partnerships, like the upcoming collaboration with Formula One, are generating global buzz.
It's a smart move to align the brand with events and experiences that resonate with their target audience. And their marketing campaigns, like the Break Free campaign, are always memorable and effective.
They've definitely mastered the art of keeping that iconic red wrapper top of mind. Now let's shift gears to water. Nestle is elevating this everyday essential with a focus on premiumization and healthy hydration.
Their relaunch of Maison Perrier, with its range of flavored sparkling waters, is a prime example of this strategy. They're targeting a younger, more health-conscious consumer with this sophisticated makeover.
And they've got Lily Collins, the epitome of Parisian chic, fronting their digital campaign. It's a brilliant way to capture the attention of that trendy Emily in Paris crowd.
It's all about appealing to the aspirations and lifestyles of their target audience. And let's not forget their innovation in functional waters, like La Vie Light in Vietnam, which offers a blend of essential minerals. They're going beyond just basic hydration, tapping into the growing demand for beverages that offer added health benefits.
That's a smart move. And finally, let's wrap up this segment with nutrition and health science. Nestle is committed to providing specialized nutrition solutions for a wide range of needs, going beyond just basic vitamins and supplements.
Products like Resource Ultra Plus are specifically designed for patients who have difficulty consuming large volumes, providing targeted nutrition in a format that's easy to manage.
And they're relaunching their Materna range to better address the nutritional needs of pregnant women. It's great to see them focusing on these specific demographics and providing solutions that meet their unique requirements.
They're also developing solutions for GLP-1 users and consumers focused on weight management. With brands like Boost and Vital Pursuit, it's clear they're committed to science-backed nutrition and addressing a broad spectrum of health concerns.
It's impressive how Nestle is leveraging its expertise and resources to create products that truly make a difference in people's lives. But now, let's get back to those numbers and dissect those financial results in more detail.
All right, let's take another look at their income statement. While their underlying trading operating profit remained relatively flat at 17.2%, we need to consider that increased investment in advertising and marketing.
Right, they're sacrificing some short-term profit to fuel future growth. But it's worth noting that their trading operating profit margin actually increased by 50 basis points to reach 16%. That's a positive sign, indicating improved efficiency and profitability.
Exactly. Now their earnings per share decreased slightly to 4.19 Swiss francs. This can be attributed, at least in part, to those increased investments in growth initiatives, which will hopefully pay off down the road.
It's a balancing act, investing for the future while delivering returns to shareholders in the present. Speaking of which, let's revisit that balance sheet. Their net debt increased to 56 billion Swiss francs, primarily due to dividend payments, share buybacks, and those ever-present foreign exchange movements.
It's a reminder that global businesses are subject to forces beyond their control, like currency fluctuations. And it's important to remember that their net debt to adjusted EBITDA ratio is at 2.900, which is pushing the upper limit of their target range.
That's something to keep an eye on, as it could impact their financial flexibility moving forward. Now let's dive into their cash flow statement. Their operating cash flow was a robust 16.7 billion Swiss francs, driven by their strong sales and efficient operations.
That's a healthy sign. And their free cash flow, which represents the cash available after capital expenditures, came in at 10.7 billion Swiss francs. This is the cash they can use for reinvestment, acquisitions, or distributions to shareholders.
And they've demonstrated a strong commitment to returning value to shareholders with their impressive 65-year streak of maintaining or increasing dividends in Swiss francs.
That's a track record few companies can match. And they're not resting on their laurels. Their proposed dividend of 3.05 Swiss francs per share, a 1.7% increase from the previous year, underscores their dedication to rewarding shareholders.
And let's not forget that recently completed 20 billion Swiss franc share buyback program. They're clearly putting their money where their mouth is when it comes to shareholder value creation.
Indeed, their financial performance, coupled with their strategic investments and commitment to shareholder value, makes Nestle a compelling company to watch.
All right, so we've explored Nestle's business from top to bottom, from those innovative product lines to their solid financial performance. But what does it all mean? What's the big picture takeaway for our listeners?
Well, Nestle is certainly not resting on their laurels. They've set those ambitious growth targets, and they're investing heavily in innovation and marketing to achieve them.
And they're not shying away from the challenges either. They're actively addressing those key risks and uncertainties we discussed earlier, from climate change to supply chain disruptions.
It's clear they're playing the long game. They're committed to creating value, not just for shareholders, but for society as a whole. That focus on sustainability is becoming increasingly important for businesses.
Absolutely. Consumers are more aware than ever of the impact their choices have on the planet, and they're looking for companies that align with their values.
Exactly. So for me, Nestle's biggest strength lies in their global reach and that incredibly diverse portfolio. It gives them a level of resilience and adaptability that's hard to beat.
I agree. And their focus on nutrition, health, and wellness positions them perfectly for the future. Consumers are prioritizing health and well-being, and Nestle is meeting that demand with a wide range of products, from specialized nutrition solutions to healthier versions of their iconic brands.
They're evolving with the times, which is crucial in a fast-paced industry like this.
Now let's flip the script for a moment.
Yeah.
What challenges should investors be watching closely when it comes to Nestle?
Their increase in debt level is definitely something to monitor. We talked about that net debt to adjusted EBITDA ratio being at the high end of their target range. That could potentially limit their financial flexibility down the line.
And the global landscape is always shifting. Geopolitical and economic factors could impact their business in unpredictable ways.
Right. Inflation and currency fluctuations are always wild cards. They could put pressure on margins and impact profitability.
And let's not forget the competition. The food and beverage industry is fierce. There are always new players and innovative products emerging.
But Nestle has a few things going for it that many competitors don't. That long history of innovation and adaptation is a major asset. They've weathered storms before, and they've always come out stronger.
Plus, they have a seasoned management team with a proven track record of success. That experience and expertise is invaluable in navigating choppy waters.
So despite those challenges, I think Nestle is well equipped to handle whatever comes their way.
They're a global powerhouse with a solid foundation and a clear vision for the future.
Exactly. For investors seeking long-term value and consistent dividends, Nestle should definitely be on the radar.
Well, listener name, we've reached the end of our deep dive into Nestle's 2024 performance. I hope you found it insightful and engaging.
We covered a lot of ground, from their diverse business segments and innovative products to their solid financial performance and plans for the future.
We encourage you to explore their annual report and financial statements on your own to glean even more insights.
And as always, keep an eye on this dynamic company. Who knows what surprises Nestle will have in store for us next?
Until our next deep dive, keep exploring the fascinating world of business and finance.